Ladies and gentlemen, welcome to So Much Winning. The S&P 500 just had its 8th green day in a row on the back of some stellar mega cap earnings. The last time the market gained 8 days in a row, it proceeded to rally a further 2% in the next week. But this was in 2024 when we were living in the promised land with expanding earnings, margins, and stimulus. 2025 has not been that kind to us, and tomorrow is the litmus test that will determine what we do next. Non-farm payrolls get released, and all indicators are pointing to a soft non-farms print. So with uncertainty everywhere, earnings behind us, and non-farms tomorrow, how do we actually trade the current environment? How should you be positioned, or should you even be positioned? Those are the questions we're going to answer today, because in a market with all of this uncertainty, doing nothing might just be the boldest move of all. So is this the start of the next rally higher, or is this the end? We've got a lot to talk about. Let's roll the tape. Welcome everybody to the Daily Recap Show, where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button, and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500, and US stocks moved higher on Thursday as strong earnings from Microsoft and Meta eased fears about big tech prospects amid President Trump's tariff upheaval. And that was the name of the game today. If you look at big tech, Microsoft up 7%, Meta up 4% on the back of their earnings, and tech as a whole was very, very green. Google gained today. Amazon was up nearly 3%. Nvidia and AVGO for semiconductors really putting on a show. But the rest of tech, not that good. Apple was slightly in the green. And then we saw like the software component of the market actually kind of red today, relatively speaking. And this followed the trend of the market where we saw red in financials, red in healthcare. We saw the broad market kind of churn underneath the hood. However, still broadly green. And again, this had to do with the technology sector. The tech sector, or the XLK, is sort of a rising tide that lifts all boats thanks to those passive indexing flows. When tech gets on a rally, the S&P 500 gets on a rally. And when the S&P 500 gets on a rally, the broad market generally follows suit. And that is why we saw stuff like XLI, XLY, XLC, XLE report very modest gains today, with the S&P 500 gaining 0.67%. The red sectors were the financial sector, materials, staples, gold, and XLV. And gold was down 2%, healthcare down 2.81%. And when you look at the factor and size segments, there was only 3 that were red today. It was the large cap value, which was down 0.6%, and then mid cap value, mid cap core, which was down 0.1 and 0.29 respectively, but inconsequential really with the broad market picture. And we saw green in almost every other factor and size segment, and growth continued to outperform. Now, the reason why we actually saw this gain, apart from big tech earnings, was actually because the US has approached China seeking talks on Trump's tariffs. This was according to an article from The Guardian. Now, there has been a lot of he said, she said, but it does look like we are getting some serious de-escalation between the world's 2 biggest trading partners. And this development may be an indication that China is softening on negotiations over America's 145% tariff. So that was one reason why we rallied today. We all know that, again, Meta and Microsoft earnings, they raised guidance, CapEx guidance remains strong. That bodes very, very well for big tech, Nvidia, semiconductors, and everything in between. And if you guys want a full recap of Meta's earnings, I have one on my second channel, FinFluential Media. If you go ahead, follow me there, like and subscribe as well, guys. You can watch Meta's earnings, and I'm going to release Amazon, Apple, and Reddit. They all reported earnings today. I'm going to drop their earnings on the channel as well. And then I think what also did help markets, specifically with regards to the labor market, was this right here, challenger job cuts. The forecast was for 290,000. We got 105,000. That's very, very positive. That's a good thing. We beat expectations on the forecast of jobs cuts. And I think this partly has to do with Doge winding down. Now, initial jobless claims did miss. However, I think the jobs cuts plays a bigger role with regards to the non-farms data we're getting tomorrow. We also did get very mixed manufacturing data, but the ISM manufacturing PMIs did beat expectations ever so slightly by 48.7 versus 48. And that was really it. We got a slew of data, but ultimately this jobs cuts data did support sentiment, especially early on in the day's trade. Some other market movers, Amazon reported its earnings. It was down in the after after hours up today. You can call it down about 1% in aggregate. It did beat on revenue, beat on EPS. However, its operating margin guidance came in lighter than expected. That is why the stock was down 4%. But net, I still think this was a pretty good earnings report from Amazon. We saw growth across all segments. AWS grew 17%, but did decelerate significantly. So it does look like that AWS business has gone from sort of like a low 20s to mid-teens growth on a year-over-year basis, and do expect very much of the same, especially as Google gains share in the market. Apple was down 2.61%, up ever so slightly today. Again, on the back of its earnings, it beat revenue, beat EPS. I didn't dive into it specifically. I'm going to tackle it on my FinFluential media channel, but I'm assuming that the guide and probably the commentary is the reason why the stock was down 2.61%. Reddit was absolutely soaring here in the after hours. Look, it beat EPS by 550%. The market was expecting 2 cents in earnings per share. It reported 13 cents. It was up 14%. And Reddit saw daily active users increase 31%, and the company also raised its guidance ever so slightly. The midpoint was about 410 million. The midpoint now after raising guidance is 420 million. So a slight guidance raise right there. But if you are going to raise guidance, the market will take it in this type of environment. And then Eli Lilly reported earnings today as well. The stock was down 11%. Now it beat on revenue, beat on EPS. However, it will take a $1.5 billion impairment charge, and that is why it actually lowered its earnings for next quarter, and that is why the stock was down. Again, at the end of the day, when you're trading at a 65 PE ratio, valuation does matter. When you're priced to perfection and you don't deliver, you're going to get a day like this. And I think it might be time to start rotating from Eli Lilly into Novo Nordisk. I think Novo Nordisk is looking very attractive, relatively speaking. And then for everything we saw today, we had 3,300 advances, 2,900 decliners, great market breadth. We saw net inflows in the New York Stock Exchange, outflows in the Nasdaq 100, led by selling here in the late day. The S&P 500 had its 8th green day in a row. Absolutely insane. And market momentum continues to move in the direction we want. Look at the 50-day moving average here at 42.8%. I think if we have one more green day, this is going to hit the 50% mark. And then we're on our way to the longer term moving averages, 100, 150, and 200 day. Look at the 20-day above the 81%. Look at the 5-day. Very, very strong performance, if you ask me. Now, markets were fairly mixed today. The S&P 500 and Nasdaq 100, very solid day, again, on the back of the mega cap outperformance. But then you look at the RSP, down 0.14% in today's trade. So it really goes to show it was a day for the mega caps. The IWM did gain, so there was that higher beta risk. There was that higher beta risk on in today's trade, and then mid caps and S&P 600 also gained. So it really was sort of that small caps, mid caps gained, large caps gained, and then these higher beta mid-market RSP names, equal weighted names, the broad market names, they didn't do so well. So again, it's sort of indicating that the environment right now is more risk on than it is risk off. In sort of a risk off environment, you do tend to see the RSP, the equal weight, outperform, relatively speaking. We're looking kind of mixed here in extended hours. Growth outperformed value. No surprises right there. Europe was flat. China was flat. The VIX continued to move down, still in backwardation, and yields ticked up ever so slightly. But this was after like probably 7 to 10 days of consistent momentum to the downside. The dollar was up 0.5 percentage point at the $100 mark. Bonds fell as a result. Bitcoin gained. And again, because we did see risk on today, particularly in higher beta, Bitcoin's going to do well. Risk off, gold is going to sell, silver's going to sell, WTI is going to gain, nat gas is going to gain as it pertains to that risk on environment. And today, something very interesting happened in the gamma charts, guys. We officially saw the call wall move up, and we broke above the previous call resistance area. Now, if you remember yesterday, that line was sort of right here. We closed above. That's very, very solid. And now we can go target the 5698 area. Let's just call it the 5700 area. And that is the high we made on this wick right before the first initial Trump Liberation Day tariffs. This was the tariff right here, the gap down and move down. You can actually see that from where we actually closed the day on the previous day to where we actually closed the day after, there was a 5% move to the downside. And then we had another gap down, as you can see right here. So if we go ahead and close above that right there, we would be officially above the close of the candle before Liberation Day announcements. And that would be a very, very positive sign for the markets. The trend is to the upside, guys. You can see me put in a low low, a higher low. We did get a little bit of volatility yesterday, but it's clear that we are using this as a low. And my expectation for the rest of the week is probably for us to go have price discovery at this 5,700 area and then sort of like risk off and then close probably where we closed today. That's what I'm thinking. Again, price discovery at these highs, probably a risk off move into the weekend. And potentially if we can hold above yesterday's close, right? But where this gap up happened, if we can hold that gap, call it the 55.50 area. If we can hold that area, that probably means we go higher next week. If we break below that area, then a lot can happen, particularly as we get to the gamma flip zone, which all moved up, by the way. The core wall, the put support, and the gamma flip for the S&P 500 moved up. So yes, we should see a little bit of positive momentum in tomorrow's trade, but do expect some of those gains to be paired and expect nothing more than a flat risk off day as we go into the weekend. But the momentum looks very, very solid for the markets. Very similar situation in the Nasdaq 100. The core wall, the core resistance, the gamma flip all moved higher. That's telling us that the options market is positive, that the market is going to move higher. They're getting a little bit more risk on. And we did see that today. We saw mega caps and the IWM outperform. That is a risk on environment with Bitcoin versus some of the more defensive names and treasuries selling off, telling you everything you need to know. So for the Nasdaq 100, we're going to target 20,300, but we should see a little bit of risk off into the weekend. If we don't get to these highs, don't be surprised. If we finish flat tomorrow, don't be surprised. But as long as we hold the high of yesterday, which is this level right here, the actual number for the Nasdaq 100 is 19,582. For the S&P 500, that number is 55.66. If we hold those two levels tomorrow, we go higher into next week. If we break below, that's where things can get a little bit dicey. And I'll tell you why in tomorrow's video. Looking at the RTY, we actually saw a compression of all of these bands. And for those of you that don't know, when you're above this yellow line right here, you want to lean bullish, buying dips, selling rips. Below here, you want to sit out the volatility and look for opportunities to get in. This is called negative gamma. This is called positive gamma. In positive gamma, we tend to see very linear returns. In negative gamma, we tend to see a lot of volatility, as you can see right here from the RTY. What I want to see tomorrow for the RTY for next week is a close above the 2,000 level. If we can get a weekly close above the 2,000 level, that would be very, very positive for small caps as a whole. Let's quickly look at gold, down 0.153%. We've officially broken below that. So yesterday I said if you are going to get a trade, probably right here, but keep a tight stop. So you probably would have gotten stopped out, but it wasn't a high conviction trade anyway. I do think that if we do get sort of to this 3150 area, potentially as low as 3100, that's where we want to start accumulating gold on a technical level. A very, very solid chart right here. I think if we continue to see a risk on moving equities, gold will continue to suffer, but gold has been very, very strong. And until we actually get a very, very solid deal with China, I think gold will continue to outperform. Now, looking at Bitcoin, this is global M2 money supply overlaid on Bitcoin. And when you offset it anywhere from 80 to 100 days, you get the movement of what Bitcoin's going to do next. Now, Bitcoin was up nearly 2% today, and this is no surprise. We said that Bitcoin is looking to make its next move from these lows right here. It is tracking global M2 money supply very, very closely. It has for quite a number of years. As you can see, this blue line is Bitcoin, this yellow line is M2 money supply, and we are going to see this move onward and upward, potentially to eclipsing the highs of 145,000. I am long Bitcoin. You should be long Bitcoin and continue to hold. We will get volatility. We can actually diverge, as you can see right here and right here. That is completely normal, guys. But the path of least resistance for Bitcoin is higher all the way throughout July, probably into early August as it seems. So hold Bitcoin, continue to hold, and on dips, buy dips, sell puts on dips as well, and have conviction in the process. Now, guys, looking at individual names, I really, really like, if you think you missed the dip, Novo Nordisk, right? Very, very solid company. After the news we got from Eli Lilly, I think Novo Nordisk is going to soar. We're sort of basing around here. It does look like we found a low in the high 50s, low 60s. We're currently trading at 65. I think Novo Nordisk, this has dominant market share in GLP-1 drugs. It's trading at a very, very cheap discount to fair value, and it's set to grow earnings 20% this year. I think you want to get into Novo Nordisk. Another name is Meta. Meta looks very, very solid after those earnings, and you're still well off those all-time highs. I think the stock is undervalued and it's going to go higher. And if you're looking for another mega cap that will just consistently perform well in your portfolio, one of those names is Visa. Visa is a great stock. very, very resilient in light of everything. In fact, it is actually positive year to date. If we go on a percentage change basis, it's up 7% year to date when the S&P 500 is down about 7%. So a lot of alpha. I hold Visa, I hold Meta in my portfolio. I may add Novo, Nordisk, but these are names you can look at if you think you've missed a rally in the S&P 500, or you could just go ahead, buy some Bitcoin or buy the S&P 500. But guys, expect volatility tomorrow, expect some de-risking tomorrow. Maybe we get an early morning pop and then a sell-off into the close. Something like that is what I'm expecting. But as long as we hold key levels, the path of least resistance continues to be higher. And gentlemen, and diving into sentiment, this is the AAI sentiment survey. And guys, we've seen very much the same of the status quo as we have for the last 4 weeks in this week's data. 20.9% of you guys are bullish on the market over the next 6 months. 59.3% of you are bearish, so still very, very elevated bearish sentiment. We saw bearish sentiment tick up, accelerate to a degree, and rising bearish sentiment among investors reaching this high reflects growing investor anxiety, which may lead to short-term market volatility. Yet historically, such extreme pessimism has often preceded stronger market returns as sentiment reverts. Generally, it does revert. And when we look at longer-term parameters for the market, when we look at like this price signal, when we've had 4 of 6 days return greater than 0.5%, 3 of those days being greater than 1.5%, as we have had in the last week, the returns we can expect pretty much 1 month from now to 12 months from now are very, very positive. In fact, we see very linear returns, 2% in the first month, 5% in the third month, up to 21.7% average returns 12 months later, 30 wins, 1 loss, and a very, very good hit rate. The drawdowns and draw ups are very, very minimal. And if you're looking for what it may look like, this is the trend. Looking at something that could be very, very stable here in the first couple of weeks and then ripping to the upside. This is the average trend 3-month look ahead from April to July in the S&P 500. So pretty much, guys, what we could see is still muted market volatility. However, it does look like we've put in the lows in the market, and the path of least resistance from here is more upside as trade policy de-escalates. What could also help momentum to the upside is share buybacks. For 2025, buyback authorizations so far year to date have tracked about 377 billion. That's 19% from last year in terms of growth. And if we look back to some of the high notes, 2023, 22, we are eclipsing those year to date performance. So this is going to help stocks. We're officially exiting the buyback blackout period from next week, and we're going to have this corporate bid that's going to support stocks to the upside. What could also help the market is the macro, guys. We actually got some pretty crazy macro data. Quarterly GDP growth, the first quarter of 2025 printed negative 0.3%. Now, this number was distorted by several special factors, including the largest ever drag on growth from net exports, water and election-related distortions to consumption, a normalization of aircraft production, and a surge in information processing equipment investment, and normalization in defense spending after 2 very strong quarters in the second half of 2024. All of this led to what we saw was a negative Q1 print. Again, there were special factors impacting this, however, still negative growth. If we print a second negative quarter, then we would be in a technical recession. But now we got to ask, what are the odds of that actually happening? Well, if we look at the current data we have, this is the Fed's GDP Now, the Q2 tracking estimate. We're looking at about a 2.5% GDP print, as you can see right here. The blue chip consensus forecast is extremely wide. Some forecasters are seeing negative growth. Middle of the road is just under 1%. The Fed's GDP Now, which is kind of dovish, is looking very, very bullish, but we'll take the data as it is. Are we going to get second quarter GDP growth that's negative? By the looks of the data, the answer is no. However, the labor market data is saying something different. This is changes in private payrolls, and we saw 62,000 growth in the ADP employment report. The expectations for this number was 115,000, so we missed by a wide margin, and this is probably telling us that we are going to get a very soft non-farms report, so do expect that. However, the consumer is not yet weakening. This was a transcript from Visa's most recent earnings. Now, I'm an investor in Visa. It's my second biggest holding, worth 30% of my portfolio, and the Visa management team is highlighting the difference between how consumers feel right now, they feel awful, and how they are actually acting. They're still spending. You can see the Visa management team here came out and said that spending continues to remain strong even through the month of April. Spending is strong and resilient, and they do believe that US employment remains very strong, wage growth remains steady, inflation has moderated, and consumer balance sheets remain relatively healthy. That's telling you everything you need to know. So guys, when it comes to the market and making investment decisions, I think it's best to follow the principles of monkey see, monkey do, and don't base your investments on general vibes. Look at the hard data, not the soft data. And looking at the hard data, tomorrow we have two very, very big data prints, non-farm payrolls and the unemployment rate. We're expecting 4.2% for the unemployment rate and non-farms of 130,000. We'll see if we get this. I'm expecting a soft number, but I think 4.2% is what we should print for the unemployment rate. Anything higher, and that could cause intraday volatility. In terms of earnings for Friday, we're looking at Uber, Chevron, and Exxon. These are the biggest earnings reporters on Friday that can move the market. Shell as well. And that's pretty much it. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, leave a comment for the algorithm. Cheers.